Thank you for joining us today in this Building Black Wealth virtual seminar. Listen, the National Association of Real Estate Brokers for 70 plus years has been on the front lines fighting for democracy in housing. Can I tell you today, as believers of God, believers in the Word of God, home ownership is the will of God for our lives. Land ownership is the will of God for our lives. The preservation of our ownership is the will of God for our lives. And we're excited about this partnership between NAREB and the Full Gospel Baptist Church Fellowship International, because we want to help you live and walk and maintain your wealthy place in the world today. And we at NAREB have a plethora of programs that can help you. If you are in need of housing counseling, foreclosure prevention, loan modification, you need classes for first-time home buyers, real estate development, real estate investing, credit repair, you name it, down payment assistance, we have what you need in this partnership. I want to encourage you today, text Black Wealth at area code 866-521-0625. Well, today's presentation is coming to us from Prime Lending. This presentation is facilitated today by Loan Officer John Muhammad, who is going to share with us unlocking the door to independence. Now is the time to buy your first home.
Hello, everyone. My name is John Muhammad. I am a senior loan officer with Prime Lending here in Arlington, Texas. I've been in the mortgage business for over 20 years, helping families achieve the goal of home ownership. Today, you will hear from me as I present on purchasing a home, whether you're a first-time home buyer, repeat buyer. It doesn't matter. This information is going to be good for you. So we're excited to offer this to you today. And I'd like to start by thanking Madam Lydia Pope and NAREB for this opportunity to present to you guys today. We're so excited, as NAREB has been working on for the last several years, the mission of home ownership and democracy within home ownership, which aligns with Prime Lending's goals of home ownership. We seek to help grow in home ownership in the Black community, and I play a part in that. And so I'm always excited to work with NAREB. I've been around NAREB for over, I would say, 10 or 15 years. My first conference at NAREB was in New Orleans, I believe, in 2009 or so. So it's a great opportunity, and I'm appreciative of it. So I'm going to jump right into my presentation. I'm going to share my screen with you all. Okay. Okay, let's see. There we go. So we'll start off with the first screen. Owning a home comes with a lot of benefits compared to renting. Before I started this meeting, I just had a conversation with a home buyer, a potential home buyer who is renting at this time, and she's living in a home that her landlord wants to sell. She's at the end of her lease, and her landlord has given her 60 days to get financing for the home and purchase it from him, or she's going to have to move. It is without a doubt, a situation that she has to deal with. But trust me, when it comes to owning versus renting, it is certainly much better to be a homeowner than a renter. Okay, so we'll talk about some of these situations and things like that, why it makes sense. So it says, why stop renting? A monthly mortgage in some cases can be lower than renting, and you'd be surprised to find that out. But rents are going up, and sometimes a mortgage may be lower than renting. Owning a home lets you build equity. I was working with a client this week that is doing a new construction purchase, and they've gained over $25,000 of equity before they've even closed. And that's because of the construction period, but homes are appreciating that fast. In most markets, homes are appreciating at 5 to 7% per year. So you are going to gain equity, which gives you other opportunities. Interest paid on your mortgage is typically tax deductible. It depends on your income, but for most of us, it's going to be something that is tax deductible, and that makes a difference. Owning means that you make your own rules without landlord restrictions. That could be painting, that could be decorating, that could be having a pet in your home. It makes a big difference when it is yours. You're going to want to improve your home and many other things that you can do as a homeowner that you cannot do as a renter. These are reasons why you want to stop renting. It is certainly a big advantage to own a home over renting a home. So where do you begin? That is the question that most folks want to know. I think that you start off by meeting with a knowledgeable person who is a loan officer, who understands the process and how to determine your ability to get pre-qualified. Then, every real estate agent, or most real estate agents, are going to want to know that you are pre-approved before they take you out to go see a home. In most cases, you're going to need to put an offer in the moment that you see the home that you may want to purchase. So the real estate agent is going to want to know that you've been pre-approved by a lender, such as myself. So once you have the pre-approval, you're going to work with the real estate agent to help you find a home. Top mortgage questions explained. Let's talk about that. How much do I qualify for? It comes down to 4 categories, and not necessarily in this order. The first one mentioned here is income. Your income plays a part in your approval, okay? And that is verifiable income. If you are a W-2 employee, we're going to use your gross income. We do not look at net, we look at gross. If you work overtime, receive bonus, or commissions, we can look at that at a 1 or 2 year basis. It depends on the type of mortgage you qualify for, but those variable forms of income can be used. If you are self-employed, it comes down to what you pay taxes on. I say to self-employed folks, as I talk to them, often hear, like, I claimed $80,000 on my tax return on line 1 of their Schedule C. But what it comes down to is what you pay taxes on line 31. So what you pay taxes on as a self-employed person is the income that we use. That can be, generally it's 2 years, but it also can be 1 year, just depends on your credit. And we'll talk about that throughout this presentation. So income plays a part. And the next thing I'll talk about is current debts. So in general, we're looking at the debts that are on your credit report. So if you have a car payment there, if you have student loans there, if you have installment loans or credit cards, all of those things are going to be factored in to your debts, okay? Child support also is factored in. So it's anything that you typically pay on a monthly basis. We're not looking at your utility bills or anything like that. So you can feel comforted by that. But we're going to look at your current debts. Then we're going to look at your credit history. All right. And just so that you all know, 580 is typically the minimum credit score that you can have for an FHA loan with 3.5% down. So your credit history plays a big part in your approval. So credit history is going to be things such as your score. It's going to be, how you paid your bills. Do you have collections? Do you have charge-offs? All of those things play in your credit history. And the last thing that I will mention here is cash available. No matter if you use a home buyer assistance program or not, you're always going to need some money. There's earnest money that has to be put up. There's inspection fee money. There's appraisal money. So there's always going to be something that you have to put up in order to purchase. So be aware of that, and we go through those details with you. Next slide is, we hear this often, right? Do I need 20% to put down? And the answer to that question is no, absolutely not. You do not need 20% to put down. There are programs offered throughout the United States that offer down payment assistance, meaning that if you're buying a home, I'm just going to use easy numbers, $200,000 requires a 3.5% down payment. That 3.5% down payment can come from a third-party nonprofit organization, a state agency, or even a national agency that offers home buyer assistance. This closes the gaps for many folks. What you'll find about these down payment assistance programs is that there are income limitations, there may be purchase price limitations, and there may be credit limitations in terms of debt ratio, but there's certainly assistance out there. It says you may be able to buy a home with little or no money down required. And some of these programs, such as Home Possible or Home Ready, these are programs offered by Fannie Mae and Freddie Mac. They offer 3% down on a conventional loan, when in most cases, if you're not a first-time home buyer, you have to put down 5%. So there are programs out there that are geared towards first-time home buyers. It's loans that with less than 20% down typically require mortgage insurance, and that is the case. So understand that mortgage insurance is a protection for the lender in case you foreclose. Whenever you're buying a home using FHA, you will always have mortgage insurance there. Under the conventional terms, once you are at an 80% loan to value, that is the difference between what you owe and what your home is worth, there is no need for mortgage insurance, okay? And there are some cases that mortgage insurance can be rolled into your loan or paid by the lender. So these are options that your mortgage professional will go over with you once your evaluation is done. What are closing costs? So closing costs are broken into three categories. There are lender fees. That is a company like that I work for, Prime Lending. We have our fees, we have underwriting fees, and we have processing fees. And so a lender can determine what their fees are, and every lender's fees are different, but there will always be costs that all of us have to deal with, and that may be a credit report fee, and that may be things like document preparation or attorney review. These are fees that we will charge you as a lender. So that's category one. The second is third-party fees. These are fees such as your title or your appraisal or the taxes on the home that may be required at purchase. These are called third-party fees, your homeowner's insurance. So that is another category. And then you have prepaid costs. So in most cases, the lender is going to pay your taxes and insurance for you when you purchase your home. Everything's going to be rolled into one payment. That is your principal and interest, your taxes, and your insurance. In order to do that, we collect taxes and insurance from you at closing, generally around 3 months. We're going to make sure that we have enough money to pay your taxes when they become due and to pay your insurance when it becomes due. So I'm going to use the example. We are here in the month of May. If you were to close your loan in this month of May, you would not make your first mortgage payment until July 1. So we're going to make sure that we have the insurance and the taxes for the month of June, and then we're going to have a 2-month cushion. Most every lender pretty much operates that way. And then when things become due, we will pay that for you next year. When you close your loan, you will be buying a homeowner's insurance policy for 1 year. Using the same example, if you were going to close on May 26th, we would pay your insurance for you next year, May 26, 2022. And whenever your insurance of your taxes are due this year, we're going to pay that for you. Okay. How does my credit factor into a loan? let's talk about credit. I know that is a major topic for most folks. I'll talk first about Credit Karma, because that is the credit scores that most of us see. It's free, right? We see these scores on Credit Karma. I want you to understand that there are 20 plus versions of credit scores and different things that you can be scored for. As an example, you have a credit card score, you have a car loan score, you have a furniture score, you have a mortgage score, and it is different than what you see on Credit Karma or what you may see on your bank statement. Your mortgage score is different, okay? There is a tool that I want to let everyone know about. It's called myfico.com, myfico.com. It is the only site that will give a consumer your mortgage score. Nothing else that is out there gives a mortgage score. But what you see on MyFICO is what I see as a lender. So understand again that Credit Karma is for the purpose of credit cards. That's why they market that way, and that's what you're going to see. That is your credit card score. So your credit score determines things such as your interest rate, okay? Interest rates are determined by score. Often when you're doing a down payment assistance program, the score minimum, generally 620, you may have the same interest rate that someone that has a 700 score gets, because when you're using down payment assistance programs, most of the time the rate's the same, no matter what the credit score is. But if you're using a traditional Home Ready or Home Possible or FHA loan, your rate is determined by your credit. Down payment can also be factored by your credit score. And the loan amount that you qualify for is determined in some cases by your credit score. I would certainly say that your credit score can drive your underwriting experience and things that you may have to deal with. Sometimes those with lower credit scores will have to have reserves, meaning money after closing. A reserve is if your mortgage payment is $2,000 a month, they may want to see that you have $4,000 post-closing because of your credit. And the higher your credit score is, I'd say that there are more benefits to that. Sometimes it may play out in your documentation. If you have very good credit, they may only ask you for one pay stub or one bank statement or 1 year's tax return. It certainly can play out well for you and also open the doors of a conventional loan. We know that many of our folks struggle or have student loan issues. There are different rules when it comes to conventional and FHA. Conventional mortgages will accept an IBR, an income-based repayment plan, whereas FHA is a 1% balance, no matter if your loans are in forbearance, forgiveness, or deferment. Doesn't matter with FHA. Their rule is 1% unless you're in a fully amortized payment. What consists of a mortgage payment? You may have heard me say that acronym, principal, it's an acronym PITI, principal, interest, taxes, and insurance. That is generally everything that you're going to have to pay, with the exception of a homeowners association fee. That when you purchase a condominium or a co-op is included in the payment, but if it's just a community situation where maybe you're paying $600 a year or whatever that number is, you will pay that outside of your monthly payment. But otherwise, everything else, principal, interest, taxes, and insurance, are all included in your payment. Next question is, it says, what is APR? The annual percentage rate is a measurement of sorts to help buyers compare mortgage options. It includes the total cost of the loan over the term. So to sort of break this down, when we use credit cards or we get a credit card, we typically speak of it in APR. But with mortgages, you never pay APR, you pay your fixed rate. And most of the time, lenders are doing a 30-year fixed mortgage. We're just not doing adjustable rate mortgages right now. It doesn't make sense rates are better using a 30-year fix. But what an APR does is it allows you to compare lender to lender. If I tell you that my interest rate is 3% today, but my APR is 4%, if it's 3% 30-year fixed rate and the APR is 4%, and another lender tells you that they have a 3% rate with a 3.125 APR, then that really speaks to fees. And that would mean in that case that the other lender has a lower fee threshold than what we have. So in that scenario, you always want to go with the lender who's sort of closest in APR. Also, what I would tell you is that if you're using down payment assistance, the APR is going to be way off because they lump the assistance into the total cost of the loan. So the APRs are higher. But that is a way to compare. If one lender is showing you a rate, they're showing you the same rate and the APRs are different, then the one with the lower APR may have better terms. Lower cost is what it essentially is. Let's talk about pre-qualified versus pre-approved. Under the pre-qualified or pre-qualification, it says it's a simple step in the loan process, help the buyer determine the price range. What we're looking for is just a general conversation. If you call me and you say, John, I want to know, is it even possible for me to buy a home? That would sort of fall in the pre-qualified category, because I'm going to ask you questions such as, how much money do you earn per year? What are your debts? Do you have a car payment? Do you have student loans? And you're giving me all of that information. And I would say, well, what is your credit score? And so I'm going to ask a series of questions. And then after we finish that conversation, I may say, well, from everything that you have told me, you are pre-qualified, meaning that I think that you can purchase a home. Okay. But it's not an actual application with submitted documentation. So the next category says pre-approved. So pre-approved is an in-depth review of your situation. We have pulled your credit. We have verified your income. We have verified your assets. We have verified employment. It's a total review of everything that you stated to me in our pre-qualified conversation. And so after I get all of that information, my job as a loan officer is to evaluate it, enter the information into the system, and run an automated underwriting decision. And if I get that underwriting decision, then it tells me that you're basically pre-approved. There is a value in that because we give you a letter that says we've reviewed all of these things, and it certainly makes the listing agent feel more comfortable that you're truly qualified to purchase a home. And then you can also be pre-underwritten, which is a totally different step that some lenders are doing. I do it here at Prime Lending. I take all of the information that I gather from you and send it in to an underwriter so that you may be able to show the seller further that you are fully qualified, with the exception of a appraisal. So those are the different types of qualifications. You always want to be at minimum pre-approved. Your home loan options. Let's talk about that. We talked about conventional a little earlier, but under conventional financing, you're able to finance up to $510,000. Okay, or actually it's higher now, that just recently changed. But understand that conventional loans are going to be for people who have generally good credit. Okay, especially if you're putting down the minimum of 3%. You have to have pretty good credit. If you're putting down 20%, conventional loans start at 620. It may work. It's certainly possible. But under conventional, if you're a first-time home buyer, they have a 3% program. You're able to get down payment gifted, right, from a friend or a family member. A close friend can gift you, or a family member certainly can gift you money to purchase a home. Conventional loans in this market right now are favored over other types of loans. So certainly if you qualify for a conventional, you may want to go that route. FHA, Okay, FHA loan, Federal Housing Administration. 66% of America is on an FHA loan. And the reason that is because FHA generally has lower credit criteria and a higher debt threshold than conventional. So under FHA, whether you're a first-time home buyer or a repeat buyer, you can utilize FHA with 3.5% down. Okay, 3.5% down is the minimum. One of the really neat things about FHA that I think is that if you decided to buy a multifamily home, such as a 2, 3, or 4 unit home, and you are going to live in one of those units and become a landlord to those who rent the other ones, you can actually do that through FHA with 3.5% down, which is really, really, neat to me. But that is some of the options. Again, depending on your credit, the interest rates, if you have a lower credit score, the FHA rates are going to be better than conventional rates. And so those are some of the advantages of FHA. If you're a veteran, you have an option that none of us, no one else has, and that is the ability to do a loan through the Office of Veteran Affairs called a VA loan. Doesn't require a down payment at all. There is no maximum loan amount. And there may be other things. If you're 100% disabled, you don't pay real estate taxes in most states. And so that becomes an advantage to you because it changes your purchasing power. And so certainly if you are a veteran who was honorably discharged and you qualify for a VA loan, that is the route that you want to go. And something that comes up often as I'm talking to potential buyers is whether or not they can utilize the benefit of, say, a parent or an ex-spouse or something like that. And generally that answer is no, right? This benefit is for the veteran and the veteran's spouse that they are currently married to. Or if your spouse died in a service-related injury, you're able to use the VA loan. I actually have a client now whose husband died in Vietnam, and she's able to utilize his VA benefit. So there are certain stipulations that you can possibly use a VA loan. Jumbo loans, these are for loans that are going to be outside of the traditional conventional loans. If you're buying a home that's say above 550 or $1 million homes, you would want to use a jumbo loan, is what that's called. I won't go into too much detail there. There may be times that you find a home that you want to purchase that needs renovation. There are renovation loans out there. You may be able to purchase a home. Let's just say that home is $250,000, but it needs $100,000 of work. If that home will, at the end of the renovation, appraise at, say, $350,000 or higher, you can take advantage of a renovation loan, still put down the minimum down payment under FHA, which is 3.5%. That's called an FHA 203K loan. You can do that. Conventional has their home style loan or different types of loans that you can use for renovation. So there are ways that you can purchase a home and make immediate improvements. Some require a contractor, others may not. It just depends on how much you need for your reconstruction. Now, let's talk about your path to home ownership. It is always to start the mortgage application. You want to do that. You want to get pre-qualified with a lender, and you want to know, it's my belief, you want to work with lenders who understand your situation. Some are better at things than others. Some lenders are experts at FHA lending. Some may be experts at jumbo lending, but you have to work with a lender who fits what you're looking for and fits your objective, So as an example, you don't want to work with if you need down payment assistance, you don't want to go to a lender that doesn't know the programs or are certified with those programs. Or, if you need an FHA loan, you want to make sure you're working with someone who understands those programs. Not all lenders offer the same programs or have the same understanding. So certainly look around. And I want to give this advice to you as well, so that you know the CFPB, the Consumer Financial Protection Bureau, allows you as a buyer to have 45 days in which you can have your credit pulled for the purchase of purchasing a home, and it will not affect your credit score. Keep that in mind. You are able to sort of shop around and know that it's not affecting your credit score. It doesn't matter what Credit Karma says, because every time your credit is pulled with Credit Karma, you're going to see the score drop. That doesn't mean that that's what's happening. And certainly from a mortgage perspective, that's not true. Your path to home ownership, again, let's talk about that. What happens is you're going to be pre-qualified. Once you are pre-qualified, if you haven't been underwritten or your loan hasn't been reviewed by a actual person, then that underwriter, that file, your loan is submitted to underwriting. While you're in underwriting, you're going through, or have been submitted to underwriting, you're going through a process of having your home inspected, right? You want to know, when you purchase a home, you need to know the soundness of that property. You need to know if there are any underlying issues that you didn't see as you walk through it. So that is happening. Again, you're going through processing. You're shopping around for homeowners insurance. And then you're also going to have an appraisal done on the home as well. So your inspection tells you about the soundness of the home, and your appraisal gives you the value of the home. We're going to, as a lender, be able to lend to the appraised value or the purchase price, whichever is the lower of the two. So if you're buying a home at $300,000 and we get an appraisal back for $320,000, then that means you're walking in with equity, but we're going to base our loan off the $300,000. If that home appraised at $290,000, then we're only going to lend to that $290,000. And if you so decide to buy that house, you would bring in the difference between what it appraised for and what you're going to buy it for. So all of these things are happening as you go through this process. Then once we have you approved and we have the house approved, you're going to have a final approval from the underwriter. Then your loan funds. It funds and you receive the keys. Generally, all of this happens on the day of closing. You sign all the paperwork and your loan funds that same day, and you receive the keys to your home. It is just a great process that you go through. So this is sort of the end of my presentation. We certainly hope that you achieve the goal of homeownership, that you ask as many questions from professionals like myself, who are lenders, who are realtors, those who've been through the process. You want to ask as many questions as you need to feel comfortable, make sure you understand it. This is the biggest purchase that you will make in your lifetime. For most people, that is the case. So you want to be well educated. And, I wish you well. Again, I want to thank NAREB and all those who help contribute to all that goes on to help educate potential home buyers and those in the Black community. We appreciate you and we thank you. And if anyone needed to reach me, I have the ability to lend across the country. I'm familiar with most cities. I'm here in the Dallas-Fort Worth area, but as an example, I'm from St. Louis. I certainly understand the market and lived and worked in many different cities. And at Prime Lending, I am able to lend in all but 3 or 4 states. So my contact information is there at 682-219-5503 or john.muhammad@primelending.com. Thank you.